How to use Bollinger Bands as part of our trading strategy. We have to avoid the biggest mistake that most beginners make with Bollinger Bands, which is just thinking that the price would always reject from the top and lower bands, which are 2 standard deviations away from this 20-period moving average in the middle. This can work for a lot of trades, but it can wreck us in many trades as well. For example, if we come into this top Bollinger Band, you may think to take a short position, thinking that the price will reject back down into the 20-period moving average. That did do it on this occasion, so a decent trade. You can also see here, if we took a short position into the top Bollinger Band, it did reject down, so potentially a good trade there. However, we can see that the price moves into the top Bollinger Band again and goes higher. So we would have got wrecked, and you can see that very clearly here as well. As the price moves into the top Bollinger Band, maybe you want to take a short position and you get absolutely wrecked in that trade. So that doesn't work, but let's learn how to use Bollinger Bands to get better entries for our trades. The first key tip is to use a Bollinger Band indicator with a much higher time frame than the chart that you're actually trading. I'm trading Bitcoin here on the daily time frame. Go to indicators, type in Bollinger Bands, and click this twice. We're going to get 2 different Bollinger Bands indicators here. This is TradingView. It's completely free. I'll link them below. Go and use it. I'll also leave a link below to Bybit, the crypto exchange I use. If you want a $30,000 deposit bonus there, you can check the link below. So firstly, it defaults to the time horizon that you're trading. So this is the first Bollinger Band indicator. You can see that. Very, very messy. Doesn't give us any trend information. On the second indicator, I'm going to go to settings, time frame, and I'm using a higher time frame, the weekly here, but you can use anything that you want. This gives me really good information about the trend of the asset. So we had a downtrend. You can see that very clearly, the upper Bollinger Band and the moving average moving down. However, we get a narrowing of the bands and then things change. Now the bands are moving upwards. You can see the moving average, and the lower Bollinger Band eventually moves that way too. Now, if this is the start of a trend, we can try and trade this. What do we do with trends? We essentially trade a pullback into the trend. So if this is an uptrend, that's a pullback into the trend, and then you actually have a pullback into the trend as well because it bounces from this lower Bollinger Band. 3 decent entry points. Never usually trade the first, maybe the second or the third we can trade, and it does move higher into that uptrend. So that's a very, very high time frame look on the weekly. Use it to identify trends and then trade with those trends on the higher time frames. Then you can go down into the lower time frames and actually get your entries. The second key tip is to use narrowing of the Bollinger Bands to actually take positions. It's almost impossible to trade when the price is moving in a very volatile fashion like this, right? Because it's volatile, even to the upside, you're going to get downside moves, almost impossible to trade. So we look for narrowing of the bands. We look for a consolidation. And if we're confident in the trend of the asset, we can use those consolidations to take positions for the next move. So we have a narrowing of the bands here. It's clearly a consolidation. Buyers and sellers aren't winning. But if we're confident in the trend to the upside, we can use this to take positions. So we take a position somewhere in the middle of that consolidation because we think that the bands are going to actually get more volatile again, move out. And as long as we're correct in the direction of that trend, then we can make our profits. You can see that here as well. It's more volatile, but there certainly is a consolidation. The bands move sideways, they narrow, and that is a consolidation. Now, if we believe that the higher time frame trend is to the upside, we can use this area to take positions as well. This gives us a much easier trade and an entry and a much easier stop loss position rather than chasing very volatile price action, which is almost impossible to trade. So we can use consolidations of the bands to make our entries. The next tip is to use Bollinger Bands in a slightly different way to get even more confident in the price action of the asset that you're trading. So if we know the price action, we know the trend, then we can get on that and start to increase the probability of actually having a profitable trade. So what do I mean by this? You can see that the lower Bollinger Band, when it reaches its volatility high points, you can see that this is generally moving upwards. So we have an uptrend here. But what we can also do is look at the other side of the trade with the moving average. So this moving average in the middle, it's a moving average that's actually printing at certain prices. Now, when the moving average is starting to break through to the upside and break through the previous volatility spikes, that's very, very strong price action. So what we can see here is that the moving average moves up and actually breaks through this, right? We get some consolidation here, but it starts to move up through this previous volatility spike. We also get this volatility spike here, and we move up through that as well. And we have some consolidation and resistance, right? But it's not moving down, and it seems to be moving up through that previous volatility spike. That is showing us that this price action is pretty strong, and it's taking out previous resistance levels, the volatility spikes of previous resistance levels. That is showing us that we probably have some pretty strong price action on this occasion to the upside, taking out these previous volatility spikes. That gives me a lot of confidence that this asset is starting to trend upwards and levels are starting to get taken out. So that shows me that I can actually start to get in here. We got a big move after that, but it just shows you and it gives you more confidence to actually take long positions because the price is starting to break through the previous volatility spikes. Very, very strong price action that you can get in on. And then you can start to take entries based on that. Now we can put all of this together to enter a trade and also create a stop loss level for our trade. If you are trading short term, we always need a stop loss. This is not investing, that's completely different. We're trading short term with an entry and a stop loss. So what we're gonna do is notice that the Bollinger Bands have changed their trend and are now pointing into an uptrend. That's something that I want to get in on. We can also see the price action is consolidating here and the bands are narrowing. So that shows me that we are potentially narrowing with a breakout fairly soon. So we're gonna enter around this price. So what we can do here is make an entry, but we need a stop loss level. Now for me, the stop loss level would be the previous time that the price moved into and then rejected from the Bollinger Bands, right? You can see that in an uptrend, you're looking at the moving average and the lower Bollinger Band. So the price would move down into these and then reject off of them. And that would be the price level. Now that happened here, but considering we're getting in around this price level, that's probably not that relevant to us. So we go back and you can see that the price rejected here to the upside. So we got a rejection from the upper, and then the moving average, we actually rejected to the upside. And so that is obviously a very important price level here. So we can get in like this, around this price. We're not going to get the best price. So let's say around here, and we're going to use this previous Bollinger Band right here and the rejection from that as a stop loss like this. And then the take profit, it can be 1.25 or 1.3 risk reward. I can see that this is a resistance zone, so I'd probably put a take profit somewhere around this. Now we missed out a huge amount of profit, but that's day trading. You either stay in the position if you want, you take your profits at previous resistance levels, that's up to you, that's trading, right? But Bollinger Bands can be used to get entry and stop loss, which is the important thing when trading. And then you can take your risk with the position, hold it for as long or as little as you like, and try and make our profits. But that's how we use Bollinger Bands to get entries and stop losses. Bollinger Bands, just like other technical analysis tools, can help us get entries and potential stop losses for our trades, but that's about it. We also need to know the fundamentals of the asset that we're trading, which part of the market cycle that we're in, the news cycle, the central bank cycle, all of that is going to affect markets and prices a lot more than these lines on a chart. So we have to know that as well. I'll leave some videos below for free if you want to learn more about that and how to try and analyze that, especially when trading crypto, and the Bybit deposit bonus if you do trade down in the description below as well. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.